Hello traders everywhere, Adam Hewison here coming to you from the digital studios of MarketClub. We're going to be looking at our internet portfolio to begin with to show you how it's very easy to get diversified and out of the market when you're seeing trouble. You've got to think of our trade triangles as like the weekly ones, especially as like the canary in the mine. They show you when trouble is coming or brewing. And sometimes it's best to be on the sidelines rather than be in the market and get punched and bullied every single day when the market's going up and down 100 points. You can't do that. It's very tough on you. So let's take a look at our internet portfolio very quickly, and you can see right away that this is Amazon right here. There's the symbol. There's our score 55 indicating the trading range. The weekly is red right here, meaning you should be out of the market. It's happened right here. Look where the market went down to. The monthly is up, indicating the longer term trend for Amazon still is positive. However, you should be out of the market if you're an intermediate term trader. Our next stock is a little bit different. This is Facebook. Now we have both the monthly and the weekly green, indicating the trend is still higher. And you can see we've got an 85 here, and we have a green monthly and a green weekly, indicating that the trend is certainly up. And you can see how this market sort of stabilized. Unlike Amazon that was going down, this is sort of stabilized and potentially could go higher, because here it is, we closed last Friday right here and we're practically unchanged for the week. So let's see how that plays out. But this is a market you should be in the market on at the moment with our 5 bucket portfolio. So moving right along. Much the same picture with Yelp. 55 weekly trade triangle right there on the 15th of September, 3 weeks ago. So I told you 3 weeks ago the market was having trouble. That's the canary in the mine. But let's take a quick look right here at the portfolio, and you can see all these red weekly trade triangles. These are all early warning signs that things are not good in that market. Looking at Yahoo, longer term trend up, intermediate term trend down, 65 trading range. You should be out of this market. Netflix, same there, 65. Monthly up, weekly down, out of this market. You can see the weekly kicked in right there on the 15th again at 470.07, and the market's about $10 lower right now than that signal. So please pay attention to that. Really, the weekly is very powerful, and don't overlook it. To bet against it is not a good thing. Here's the Dow. The Dow is down dramatically today. In fact, if we close below 16,800, and I'll show you where that is right now, that's going to be a new low close for the Dow, and that would not be good. So here's the lowest close right here, and that was 16,801. So if we close below that level, it's going to be not good. Again, you've got a 55 reading here, indicating a trading range, indicating you should be out of this market. You can see where we had our signal to get out, which is right here at 16,937. So again, it's a good thing to use the weeklies. Same picture on the S&P 500, 55, a trading range. The weekly kicked in right here, and you can see if we close below there on the S&P 500, below 1946, we're not that far away, only 5 points away. It's not going to be good for this market. A new low close would be bearish in our opinion, and again, potentially tipping this market over. As I said, they don't ring a bell at the top of the market. No one said this is the top of the market. It just happened that some of the early indicators, like a weekly trade triangles, kicked in and told us that to get out. Moving along to the Nasdaq, this is pretty much the same picture there. The Nasdaq, 4,422, that would be a new low close. We're very, very close to that level right now. If we close below 4,420, that would be a new low close, negating this reversal in my opinion. 55 trading range, be careful here. Gold is the only bright picture, possibly turning around. You can see the daily has turned around, indicating you should be out of this market. So you use the weekly. Unlike the stocks, you use the weekly for trading gold, for trend, and the daily for timing. So you can put, there's a lot of trades in here of course, but you can see that was the last signal red at 12.10. You exited 12.13, you took a small loss, but nonetheless you're out of the market. You don't have to worry about it. That's an early canary signal. So just be careful with these markets. They're very volatile and they're quick to take your money. Hey, I'm Adam Hewis, and I hope this little lesson on the canary in the mine is helpful. And look at those trade triangles. They can help you make money and stay out of trouble. Have a great trading day, everyone.